There are decades where nothing happens, and there are weeks when decades happen. This is the famous quote by Lenin. He was referring to periods of slow change versus intense, transformative shifts in history. Look at the first week of 2026. I feel exactly that. Hi everyone, for those who are new here, my name is Martina. I work in finance industry for 10 years and right now I work as investment strategist. I am a CFA charter holder. This is Market Brief. Every week, I will summarize what happened in global stock market through my lens of foreign investors based here in Thailand. Today, I want to share my 3 key observations for the first week of the year. First, the bullish resilience of global markets. Let's start with asset class performance. The US market has been open only about a week, but we feel and we already seen a lot of drama. We began the year with the news of the US intervention in Venezuela. Initially, I fear that this could derail returns in 2026, but the market's reaction surprised me. Asian markets rallied on Monday. Japan's Nikkei was up about 3%, and Kospi in Korea followed suit, up about 3.4%. Even China, where I was surprised and I was expect that the Venezuela conflict to create anxiety regarding Taiwan, China's stock market still rose about 1 to 2%. While investors are clearly bullish, we are seeing a barbell effect, like they are investing both in safe haven assets like gold. Gold continues to see an inflow, while capital is rotating out of Indian equities and bonds. So this is my take. This is a momentum trade. If we get off the trend too early, we miss the lump sum returns. But if we stay too long and the correction hits, the sell-off could be deep. Second observation, the great sector rotation, broadening out. My second observation is that the rally has broadening out significantly. We are seeing the small cap outperform the heavy tech in S&P, and the Russell 2000 is already up about 5% this year, while S&P was up only 1%. If we look at sectors, materials and energy are the leaders. Meanwhile, information technology and utilities are actually down about 1 to 2%. You will be even more surprised if you look at performance of stock in Magnificent 7 so far. Nvidia down about 3%, Apple minus 5%, Meta 1.4%, Microsoft down about 1%. The only stock in Magnificent 7 that is going up is Alphabet or Google, which is going up about 3.6%, the only outlier. In the past, the Magnificent 7 was a crowded trade, a safe bet when economy was slowing down. But now, there is no sign that economy is slowing down at all. There is a sign that economy is heating up. So that's why money is flowing into cyclical and real sectors. The stocks moving the market is even surprised me because the name is totally different from last year. If you look at SanDisk is the company that the stock market jumped the most this year. SanDisk jumped on the huge volume after Nvidia CEO Jensen Huang noted in the CES event in 2026 that memory is the largest unserved market in AI. So SanDisk rally. Other stocks like Builders Outsource, which is categorized in capital goods, also rally. Lam Research, benefiting from memory chip manufacturing. Kawana, very high volatile stock, but investors expect a boost from 2026 tax refund. Relo Energy, a play on Venezuela oil, and Albemarle, rising alongside with the surge of lithium prices. So clearly, the market has already broadening out. Big tech is no longer the only game in town. Cyclical stocks are now taking the lead. Third observation, geopolitics, the new investment premium. Finally, the 2026 will be a year of geopolitical risk. Before COVID-19, investors rarely had to monitor geopolitics this closely. Today, it requires a risk premium. Just 5 days, we have seen Venezuela's situation and discussions regarding to Greenland and Cuba. These operations are expensive. Reports suggest that the US may need an additional $500 billion for defense spending, adding to already a massive debt load. This changed the status of safe haven like the US Treasury. As the debt pile up and bond supply accelerate, investors may become more and more hesitant to buy the US Treasury. And this is why we see the outflow from the asset class. So those are my 3 observations for the first week of 2026. What are yours? Are you staying on the momentum trend or moving to the sidelines? Feel free to comment and share your thoughts. That's it for today, and I hope you enjoyed my market brief. See you next week.